Hello, everybody. Joe Lucey here with Secure Retirement Financial. I want to thank you all for joining us here today for the latest weekly huddle here with me. Today, we're going to be talking about some Social Security basics. So hopefully my PowerPoint has popped up there and we can all see this. Let me ask you a question before we get started. Have you made an average or above average income throughout your working life? If so, what I want to share with you here today is that the basic rules around filing for Social Security may not apply to you. So we're going to have about a 15-minute conversation here for this week's huddle. And the reason for this is because if you were asked some basic questions around Social Security benefits, do you think you'd be able to answer those correctly? Now, there was a recent study by Forbes magazine that said only 1 in 300 could answer basic questions around Social Security. What that means is that the average American, 99.6 of us are challenged when it comes to answering even some of the most basic questions around Social Security. And I think that that's a mistake because Social Security, in my opinion, it has to be the foundation of an income plan in retirement. We've seen this over and over throughout the whole COVID virus type stuff. Families with higher levels of dependable income, what we call mailbox income, money that hits the checkbook each and every month, regardless of what's going on in Wall Street. Families that don't have to take money out of an account that just got beat up back in March, that was down 34% over a very short period of time. Families that were able to meet those obligations that they had without dipping into the market had a much more secure retirement than families that didn't. The problem is, and I see in my industry, is that because Social Security is not a commissionable product, it's not a mutual fund, it's not a stock, it's not an investment account, it's not a money managed account. There may not be as much incentive around advisors to help families make the right kind of decisions around Social Security. In fact, more often than not, we're told to take Social Security as soon as we can. And in some situations, that does make sense. But for the vast majority of the families that we see coming in our offices here in St. Louis Park, taking your Social Security where both spouses, or if you're an individual, taking it right away is often can be a pretty big mistake. So that's what I want to spend some time talking about. How do we view Social Security? If you're a client of ours, I welcome you to join us at the end of the session here and schedule some time to visit one-on-one. We can have a 15 to 30-minute phone call. If you are somebody that was just got an email out of the blue, maybe you'd been in our office some time ago and kind of were looking for answers around Social Security, I invite you to take advantage of that as well. And more, we're seeing families are forwarding on these 15-minute Monday morning sessions that I'm doing. And if you were referred by somebody, I encourage you to schedule some time as well. This is, in my opinion, understanding that the investments, the strategies, the stocks, the bonds, the mutual funds, and how those come together, while very important in a comprehensive retirement plan, is not a substitute for some of the planning that we do here at Secure Retirement Financial. Starts with income, making sure we can take our money back, make sure it lasts a lifetime, doing so in a tax-efficient way, looking at how taxes fit into our overall planning, are all just as important as the investment strategies we employ, and making sure that we bring that all together for you through a planning process. So Social Security is a big piece of that. Here's the disclaimer that we put up each and every week. It just basically says, hey, look, I'm not a CPA. I don't do tax. I can't interpret tax code. I'm also not an estate planning attorney. We don't draw documents up here. Even though probably less today about talking about estate planning, but we do bring in that kind of planning with all the planning that we do for our clients through what we call our Tax Smart Retirement Program. So let's start off. Why are so many people confused around Social Security? What is going on that so many families are making mistakes, or we've been told just to take it as soon as possible, and then we end up leaving a lot of money on the table. Part of the problem is that there's 2,728 rules in the program operating manual system of the Social Security Administration. There's 2,728 different rules, and around those rules, there's thousands of other rules around the rules and exceptions to those rules. It's an area that most generalists in our industry, financial advisors, have a hard time keeping up on. Now, I wrote the book on this and the Retiree's Guide to Social Security. And at the end here, if you schedule some time, I'll make sure I can get you a copy of that when we visit. But this is an area that I've been focusing on going on 27 years, helping families make these decisions. I realized early on, and in my book, I talk about a story between my dad and an interaction that we had as he was looking to take his Social Security benefits. At the time, I worked for a large brokerage firm. I call a big box firm. It was Prudential Securities. There was no advice given to advisors around this because the firm looked at the investment strategies as what we offered, not necessarily the comprehensive planning. Social Security was actually a liability to a large big box brokerage firm like that. So they didn't want us giving you advice on that. I didn't like it then. And in 2000, 2001, 2002, when that whole thing was going on and I broke off and went independent, I brought Social Security as a major focus of our planning. So this is an area that we've operated in for going on 20 years now. So also understand that it's not just me that's saying that Social Security is complicated. Bloomberg has told us that 96% of Americans are actually leaving money on the table. How much money? $111,000 on average. That is a lot of money for most families. It's some of you may not think it sounds like a whole lot, but $111,000 of money that doesn't have to be taken out of your IRAs to help support your lifestyle, that can really help things stretch out a lot more and ultimately leave higher wealth for your family going on or what have you. Just allows you to spend in confidence. And that's really what retirement planning should be about. How do I retire in my 60s? Make sure that in my 70s and 80s, I'm not wishing I had that money back earlier that I had spent in retirement. And Social Security is absolutely key to making sure that we make our money last as long as we do. We talk a lot here at Secured Retirement Financial about this concept of mailbox income. I alluded to it just a few minutes ago. What is mailbox income? Mailbox income is money that hits the checkbook each and every month, regardless of what's going on Wall Street. It doesn't care if the market's up 300 or down 300 or, a few months back, up 2,000, down 2,000. We're seeing more and more volatility. And if you're getting ready to retire today, if you're in what I call the golden decade, the age between 60 and 70, when most families are looking to retire, understanding that the more the volatility, the more important mailbox income is. Money that's going to be in the accounts no matter what. About 1 in 5 Americans have pensions around. Pensions are also a fabulous source around mailbox income, making sure that we're optimizing our pension income, optimizing Social Security. It's the foundation of a retirement plan. Without income, there really is no retirement. Other ways that we can create mailbox income, sometimes it's using real estate rental, sometimes it's using like annuity products. There's a lot of different ways you can do this, but the foundation, 90% of us have access to Social Security. So let's get this piece right. And I think it's that important. So that's the biggest reason why we want to make sure we get our Social Security planning right. Number 2, it's tax efficient. A lot of families don't recognize, a lot of families that are in our offices and what have you, or even the advisors, I think, don't recognize that Social Security by itself is 100% tax-free income. Nobody joining us on today's webinar would ever have to file another tax return if the only income you needed to sustain your lifestyle came from Social Security income. With that said, there's other sources of income that can create a situation where Social Security can be taxed. In fact, up to 85% of your Social Security income can be taxed. Doesn't mean that 85% goes to the tax man. I'm saying that of that income, if you had $1,000, $850 of that's taxable at whatever the tax rate is that you're in. What creates this is it's a complicated formula called provisional income. If you schedule a review, 15 to 30 minutes with one of our advisors where we can get you this analysis. Part of that is we're going to show you exactly how much Social Security income you'll be being taxed on if you stay with your current planning. So the 85%, as I was saying here a second ago, nobody pays tax on Social Security income. It's an other source of income. Pensions, IRA distributions are the big one, RMDs, required distributions. When those start coming out, not only do we end up being taxed on that distribution from the IRA, but it can oftentimes create a situation where I'm being taxed on Social Security. It's a twofer. I take $1,000 out of my IRA, and not only am I being taxed on the additional $1,000 distribution, which in many cases families wish they didn't have to touch, they'd rather keep the money growing tax deferred, but that $1,000 also creates a situation where another $850 is taxed on Social Security. This is something that's important to start planning around. When you think about Social Security, understand that this is a asset that's really hard to replicate. It's hard to change. It's indexed for inflation. It's guaranteed as long as you live. In fact, in many cases, it's guaranteed until the last surviving spouse passes on. It's unrelated to what's going on Wall Street. The money is going to be there. Now, sometimes when we start talking about this, families are concerned because they've heard that Social Security is on life support for a long time. Really, there's a lot of different ways that Social Security can shore this up. I think we're going to see more taxes around Social Security. So that 85% level I was talking about earlier, I think it's going to eventually go to 100. I think it's a foregone conclusion. If you come in our office, I can share with you the history about taxes of Social Security. When it first started in 1983, only 4% of the population even paid tax on Social Security. Now it's well over 50% are paying tax on Social Security income. And also some of this income can create situations where you're being taxed additional premiums into Medicare. Sometimes I get corrected when somebody says that's not a tax, it's additional premiums. Well, regardless, it's about the amount of income you're taking. It comes from your tax return. On how they calculate that. This IRMA, income related to Medicare adjustment amounts. If you're in a situation where you are going to be paying higher Medicare premiums, you'll want to know it. Maximizing Social Security is one way that I can help families from paying additional Medicare premiums. The biggest question we have as we get ready for retirement and get back to this golden decade between 50 and 70, if you're retiring in that time period, the first question you should ask yourself and put into your planning and have your advisor make sure that they are documenting and putting this in writing is, should I spend more of my money from my IRA first and waiting to grow my Social Security, or should I take my Social Security first and then plan on taking more out of the IRA down the road? We mathematically, statistically, and historically, we stress test all income plans we put together. We can show you the difference between taking Social Security early, taking it later, and I can assure you that smart decisions around this can really make your money go a lot further. And that's why we think it's that important to bring income planning and the tax planning in together with my investment strategies. Because otherwise, it can hit you like a ton of bricks. You start paying tax on higher Social Security benefits. The additional taxes should be going to your family. They end up going to a place that you probably, most families say, hey, who would we like our money to go to? Most families in the order are their family, charities, and then the IRS would be third on that list, unfortunately, because a lot of times we aren't bringing in tax-efficient planning into a retirement strategy. When we see families in our office, they end up doing it the other way. It goes to the IRS first, and then maybe to the family and charity. Sometimes, whether you're charitable or not, sometimes it can be left out if we aren't being proactive about our planning. So one thing about Social Security is most families, again, think of Social Security benefits as taking it at one of three dates. I take it as soon as I retire, whether that's 62 or as soon as I can. I take it at 62 because I retired maybe earlier, or I'm retiring at 62. I take it right away. I take it at my full retirement age. What's the full retirement age? It's an age that we all have where Social Security calculates 100% of our benefits. It falls between the age of 66 and 67. Those of you born before 1954 are 66. Those of you born after 1960 or 1960 or later are 67. Those of you in the middle there, they add a couple months for every year between. So we can show you how that fits as well. But understand that there are some really simple strategies that we can employ that can help you eliminate or reduce taxes and maximize your benefits. The problem is the Social Security Administration is not allowed to share this information. They're legally not qualified advisors. They're trained in the rules. They can tell you which is the best strategy for you to take it today, but if there's a better strategy that's 6 or 8 months or 2 years later, they are not allowed to do that, and that's by law. Forbes, there's an article that talked about the Social Security Administration has 40,000 undertrained, overwhelmed, and sometimes arrogant staffers who routinely tell people that they're dead wrong, half wrong, misleading, or incomplete information. As a result, thousands of families are making terribly wrong decisions daily about claiming their Social Security benefits, and it's costing huge sums of money. And back to that Bloomberg article, 96% of Americans are leaving $111,000 on average. We want to help you with that. So whether you're a client of ours and are still just want to make some Social Security decisions, still want to just kind of come back and review what we might have already put in place in the income plan already, whether you're somebody that has not visited with us but has not made decisions around Social Security, if you don't have it as a documented process about how to create income in retirement, let us show you how that might change that. If you're referred from one of our other clients, it's 100% free. Know that some advisors might charge hundreds of dollars to put these together. Leave the checkbook at home. Let us show you how this works. Let us give you some value. If you're getting value out of our 15-minute presentation a day, I think that you'll even get more, because there are some little known strategies that you can use that will get you more out of your Social Security Social Security benefits, and the administration's not allowed to share it with you. I'm going to share with you how to get a free secured retirement analysis in just a few moments. What we do is we show you how to optimize your Social Security benefits. We can show you how to reduce or eliminate taxation around your benefits. And if there's other benefits that you'd be eligible, we can share that with you as well. On top of that, I'll get you a copy of my book, this Retiree's Guide to Social Security. I should have had one of those to hold up. I don't have it here handy, but we'll bring it to you. Here's what the report looks like. We're going to show you different strategies. We're going to show you the best case scenario, which is in the blue here. We're going to show you the worst case scenario, but just because we do that, there's a lot of free calculators that will give you those two. We're going to show you some other scenarios too. And in this case, the clients that we visited with, even though it wasn't the largest way to take the benefit, the largest was a $1.29 million benefit. Instead, this is a net present value. Instead, we actually recommended a 1.26 strategy, the yellow strategy here. Why did we do that? Because it actually gave them income earlier. And in many cases, you have to live all the way out to your 90s or better before the optimal strategy even kind of pays you more. In this scenario, either the yellow or the green would have been a better situation for this family. So therefore, we put that in there. We documented it. We put it into an income plan. They were able to walk away from our offices with that, and they were able to bring that into the retirement planning, because ultimately that's what it's about. How do I take it back, make it tax efficient, make it last a lifetime? Social Security, it's the key to this. And I want to thank you for joining us. So here's what we're offering. If you would like to, again, if you're already a client of ours, then just you can schedule a calendar here, and we'll know that you're a client of ours, and we can review what we've already put together. If you are somebody that has not been in our office, or maybe you've been in once or twice and the timing wasn't right, this is free. We want to make sure that we get this right for families. It's kind of one of my professional missions, is to make sure more and more families are getting the most they can out of Social Security benefits. And one way to do that is to take your 15 to 30 minute session right now, and let's show you how we can do that. With that said, I hope everybody has a wonderful week. And if you have any other questions, feel free to email us there. That email address on the bottom, info@securedretirements. We have our office number there, 952-460-3260. I put down my cell phone when everything was kind of getting wonky. We'll probably remove that from these going forward. So you might want to write that down. If you ever want to get a hold of us, that's a cell phone number that you can reach out to us there as well. With that said, again, have a great week, everybody. And I hope that you found some value. And if so, don't forget to schedule your 15 to 30 minute session there today. These are going to fill up fast, so we want to make sure that we can get everybody that wants to get a session to do that. So with that said, enjoy the rest of your week, everybody, and thanks for joining us today from the Market Huddle with Joe Lucey. Have a great day.